Okay, good morning. Welcome back, everyone. We're going to get right into the stock market technical analysis. We have Fed Day today, so the Fed's going to come out here in a few hours, talk about what they're planning on doing and their decision around rate hikes. So we'll get into that and, using the charts to be our guide. A couple things I also want to point out is Microsoft. They just reported earnings, so we'll look at that. And again, the markets can move pretty quickly during market moving events like a Fed Day. So we definitely want to keep a point, keep a sharp eye on our key levels. Okay, when the markets are moving quickly, it's not the fundamental analysis. It's not what they say. It's not so much. It really doesn't have much to do with the near term future. At least it's more about the algos and the technical levels and just buy orders firing off based on automated programs. So that's that. So we'll keep an eye on that. The Fed Day is, not usually the best day for trading, only because it's very volatile and it's whippy. It doesn't always line up with what the charts show, at least in the short term. You can have moves straight up and then crash down and then move up. It can oftentimes be all over the place with no real indication of where it's going to move next. So what I'm doing today, I'll show you guys what's going on. Drop me a thumbs up if you're finding value. Check out my stock market technical analysis course. I put that in the link in the description below. And leave me a comment. Let me know how I'm doing. Let me know what you guys think of the content that I'm putting out. All right, triple Qs. So let's look at the hourly chart here to narrow it down on the kind of close time frame. So here's what I talked about, how I was going to treat the market so far this week. On Monday, I said I was looking for a pullback down to about 296.30 area. Again, that was going to be our key area of support. So there it was resistance, resistance, resistance. Nothing new. I covered this in my previous videos the last couple days. So on yesterday, we sold down. Now they undercut it a little bit, but again, recognize the week that we're in, okay? With big market moving events coming this week, you got to give levels a little bit of room. Okay, they're not going to react perfectly this week due to the fact that there's lots of for one, there's typically low volume, so you've got a lot of market makers that are in there just running stops and playing games on the low volume. Big institutions aren't going to be taking huge positions right ahead of the Fed. They're going to wait till afterwards to take their positions. Okay, so we undercut that a little bit, but what I did is I started, so I was short coming into the week. As we sold down to my key level of that 296.30-ish area, I covered my short. I started to flip long, and I didn't buy it all at once, but I bought, part of it, and as it continued to drift lower, I continued to add up to a pretty sizable full position for me. Looking for a bounce is what I was looking for. But with the Fed coming up, I really was looking for a bounce and then ideally looking to get out of that position into the Fed. I don't want to gamble with a huge position coming into the Fed. So if I got the opportunity of a bounce before the Fed, I was going to take it. And that's exactly what I did. So we rallied up, gapped up today, started running up. I sold that position and I'm now flat. All right. So that's how I'm going to go into the Fed meeting. I'm going to go in flat. And we'll see where we come of, what comes up next. Looking at the daily chart here on triple Qs, they keep buying the dip, guys. It's just the reality of what's going on. We are in an uptrend, all right? We've started an uptrend back in June 17th, and every single dip is being bought. There's one there. There's a dip being bought there. There's a dip over the last couple of days. Today they're buying it. So we are in an uptrend, and there is no change there. All right, that uptrend was forecasted in advance with nice solid bullish divergence. All right, so we had nice bullish divergence on the RSI and the PPO telling us that we were about to reverse this downtrend and we needed to wait for that buy signal. Okay, we got the buy signal, the official buy signal from my perspective. Where did I go long? I forget exactly when I went long, but clearly this was a buy signal right there, that candle. July 7th, because you had a downtrend to watch and we broke above that. So we broke out, back tested, and we're continuing higher. So Market's moving up. Until I see a change, I think we continue up. All right, so that's where I think we're going. Now, what happens today? I don't know what happens today. If we sell off and we sell down to, there's support down here on the trend line. All right, down there at about 288. All right, that's a buy area. I'd be looking to buy there, and unless we break that. All right. Okay, so levels to the upside to watch. We've got this, obviously, this kind of 305 area. We've already hit it once, so I'm really looking at 315, 314.60 is what I got, and then up here at that 329. I do think those levels are going to get hit maybe today on the Fed news. We don't know. That's a pretty big move. We're already up 2.5%, so if the Fed comes out, maybe I don't see us going all the way up there today, but could start to make our way up there. And those are the levels I'm really interested in shorting. So again, I want to short. I really would like to short right up in here. That's my key level to short. That would be a good entry point for a short for the next wave lower. Other than that, just looking for more upside. PayPal. Okay, look at that. Pretty much perfectly as expected. We went up to our first key level, 84.35. That was a gap fill. Sold down to support, which was about 77.86. Undercut it a little bit yesterday, kind of closing below it, but still, right before Fed whipsaw, look for false breakdowns and false breakouts. That's kind of key. Today, boom, gapping right up and moving right to the top of the range and resistance. So we're at resistance now. It doesn't make sense to take a position here and now, but if you took it yesterday on that move down to support, then I'd probably lighten up. That's how I treat it, and that's exactly what I did. But for a move, and I started buying this about 77.80, and right now that's about an 8% gain in one day. All right, so not bad for a day. And right now at resistance, I just think it's better to go flat into this Fed meeting, and then we'll reevaluate. Okay, gold. Big potential for gold to move today. I think it will move to the upside, only because that's what the chart's showing me. But let me show you what I got on gold. This is GDX. This is the gold miners. These actually look more bullish than the actual metal. On GDX daily chart, bullish divergence. There it is, right there on the RSI. And if I zoom in on the PPO, kind of have to zoom in. There it is right there. See how the momentum is just making higher lows, and we don't have a higher high yet, but definitely higher lows. And you can see we're moving higher there in the RSI, while price continues to drift lower in a bullish pattern, bullish falling wedge pattern. All right, so that's a bullish technical setup, but we don't have any indication of a buy signal yet. So in order for a buy signal to trigger, I'd really need to see a break of this level, some sort of big green bullish candle. Maybe we get that today or by this end of this week. I don't know if it'll happen exactly today, but possible. And what would that, why would we get that? Well, it'd come from the Fed signaling that it's going to be data dependent and wait and see. And this is the last hike for a while. I don't know if the Fed's going to signal that, but if they do, gold should like that and should rally. So that's what I see. I see a bullish setup in the miners, and I just need some buy signals to tell me, okay, gold's done with this downtrend and it's now about to rally. Gold bullion. This is gold. Gold bullion. It doesn't have the same bullish setup. It doesn't have bullish divergence. It is holding support, but it just doesn't have the bullish divergence. GLD, same kind of look. This is your gold ETF. No real bullish divergence on the daily chart. Maybe it's there on the hourly. We can kind of look at that, but slight bullish divergence on the hourly, and I can just point it out right there. It's you can see it right there. All right, bullish divergence on the hourly, not on the daily though. So, but sometimes the hourly's good enough. So we'll see how this plays out. Again, we need to wait for the Fed to get out of the way. I know it's kind of a broken record thing, but I just want to iterate how important, at least to me, that it is to not load up on positions right ahead of the Fed, because even if something's going to rally after the Fed, sometimes when the Fed comes out, they'll dump it. Maybe they'll sell it down and then turn around and buy it up. All right, well, if you have a big position, you might not be able to ride out the initial move. You exit the position, they turn it and buy it up, and you're stuck with the losses. Oil futures holding the bull trend. All right, this was started back in November of 2020. You can see support, support, and we're just kind of holding that over the last couple weeks. Still holding that bullish trend, so we'll see where this goes. It is at support, so you could buy it here at support and catch a rally, or we might break. Again, let's just wait till after the Fed to see how this plays out. Microsoft. Okay, so Microsoft came out with earnings yesterday, and when I click on it, here's the earnings. You'll see here that they missed their earnings. Just not much of a surprise, but they missed on the earnings, and yet the stock rallied. Okay, the stock's up 4.5%. Why is that? Well, because the stock's not trading on the fundamentals. One, it's trading on the Fed, but most importantly, it's trading on the technicals. And we closed yesterday right at support. So if I look at the daily chart, you'll see here, all right, rolling way back. We've got this trend line to watch. Support, support. All right, this is where the trend started. And then as I zoom in, you can see there's another reaction. There's another reaction. And yesterday closing basically right there at support. So they held that support and it gapped up. All right, so that's it. We have a bullish trend, and bottom line is the technicals tell us typically where stocks are going to go before the fundamentals, before the headlines. Okay, guys, I've been scanning around for the last half hour or so looking for anything new. Bottom line, right before the Fed, I don't see anything I really want to point out that, tell you guys about taking trades. There will be lots of opportunities showing up, after the Fed and as we get through some of these earnings. So, bottom line, I think tech's got some more upside. I think gold is going to rally, but we just don't have enough signs yet to be super confident on those. I think the gold miners, are likely going to rally. And we'll see how things play out. So drop me a thumbs up on your way out. Check out my stock market technical analysis course. If you're interested in learning this as a skill set and not just watching my YouTube videos, the course is there for you. It's not free, but it is affordable. Link in the description below. And I will catch you guys on the next video. If anything crazy happens after the Fed, then I'll put out an end of the day video. Otherwise, we'll put one out tomorrow.